Your exercise sheets look like this. In Excel, you've got various tabs for the different exercises you're going to do. In this case, this tab is sales invoices, and we're going to use it for chapter 1 and chapter 5. You can read the instructions on here. Step 1, this is if you're doing it by on paper or any other way. So the first step is arrange your invoices in date order. The work pack on page 24 of the book, it's already arranged in date order, and if you're using software, you don't really need to do that. Step 2 is list and analyze the sales invoices as shown in this example here. So this is just an example of how you list them out. I'm going to do that in a minute. And then we'll go to step 3, step 4, and I'll explain a little bit more about what you're seeing and what it means in accounting terms. So we're going to go to the work pack, which is in, I'll scroll down here, it's in Appendix A, page 24, and we've got a pack of sales invoices. So this is like what you'll find in an actual business, and if you're trading, you probably have these as well. So I'm going to record them on our list here. So the first thing I'm going to do is put in the date of this first invoice, which is 15th January 3000. The invoice number, which is there, is 1001. The name of the customer is there. It was an invoice by the company limited to John Smith. So John Smith. The gross amount is down here. It's 4,700. And the VAT amount is £700. Now, what was this invoice for? It's this company we know is selling computers to the public, and therefore it's sales. So we're going to analyze this as a sale. So we put the net value in there. The VAT is tax that would be eventually paid to the government. Okay, we then go to the next invoice and just scroll down in your ebook. So next invoice is there, invoice number 1002. The date is 21st March. Put that in. 3000. 1002. And it's to W some works. The gross amount is 7050. The VAT amount is 1050. I'm using Excel here, and in here I've got a formula. As you can see, once I put the gross and the VAT amount, it will calculate the net amount for me automatically. If you're doing it on paper, you have to calculate it using your calculator. Or you can see on the invoice actually. So the net amount is 6,000, and it's also sales. Go to the third invoice, and the date is 25th May, 3,000. The invoice number is 1003. It is to John Tarzan, and the amount is 3525. That's the gross amount, and the VAT is 525. 3,000 net sales, classified as sales. Yeah. Go to the fourth invoice. 15th July 3000, 1004, and it's to Harry Limes, and gross amount is 3525, and then the VAT is 525. The net amount is 3,000 as well, and analyze it as sales 3,000. Go to the fifth invoice. That one is dated 15th August 3000. The invoice number is 1005, and it's to Violet. Okay, the gross amount is 4,700. The net amount is the VAT amount is 700. Net amount is 4,000. You can see on the computer, it's 4 computers she bought, and we analyze that as sales of computers 4,000. Go to the 6th invoice, scroll down, and that one is dated 15th November 3000, and invoice number 6 is to the Coffee Shop Limited. The gross amount is 4,700, the VAT amount is 700, and you analyze it, sales 4,000. Yeah. And then you scroll down, and then, oh, here we got now credit note. Credit note is it's the opposite of a sales invoice. It's basically when, in this case, the customer has returned one of their computers back to us, and we need to credit their account to show them that we now owe them back a refund for that computer they sent to us. So we're issuing the coffee shop a credit note, and the date of that will be 2nd December 3000. It's got a different numbering sequence, so it's C001. It's the coffee shop again, and now we put in minus 1175 is the gross amount. The VAT is minus 175, and we analyze it as minus 1000 in this column. And I think that is all the sales invoices credits. The next bit is purchase invoices. We'll do that in a separate lesson. So I'm going to go back to chapter 1 here. So what we've done, we've gone through the invoices for the year for the company limited, and we've entered the details on here. So we got the total gross sales is 27,025. The VAT is 4,025, and the net sales is 23,000. Now the net sales represent the value of computers that are going to go out, flow out of the business. The VAT represents tax on sales that is going to flow out to the government, and the gross amount represents the cash that is going to be collected from these customers when the time for payment is due, and you will update this when we come to doing the bank receipts. So for the first chapter, we just need you to understand the records of a business. It's been selling computers. These are its sales invoices, and simply we just list them out: the gross amount, the VAT amount, the net, and classification of what it is we've been selling. Sales, a company could have more than one product, in which case they might want to analyze different products here. So another thing here to note is this can be considered a list of debtors, i.e. people who owe you money, and as I said, we'll be collecting that money from them. The keywords here are flowing out, the sales, and the VAT, and then debtors representing cash that is going to flow in to the business. These words flow out and flow in are important, intuitive, you can understand what I'm saying, but they're going to represent credits and debits when we come to the technical use or technical words in accounting. That is it for chapter 1. I hope you've enjoyed it, and please join me on chapter 2, where we'll deal with purchase invoices. Thank you.